Hey guys, welcome back to another video, and today I'm here to talk about a stock that I think is going to go up. I think that this stock is going to gain value, and I know it is because of these reasons I'm going to explain in 1 second. So if you guys do enjoy this video, be sure to smash that like button. Also subscribe to the channel. We are very close to 600 subscribers. As of recording this, we're 21 away. Thank you guys so much for the support, and let's get right into it. So the stock we're here to talk about today is none other than Meta Platforms. META is their ticker symbol, formerly known as Facebook. This company is ran by CEO Mark Zuckerberg. They have 74,000 employees. Their market cap is 1.78 trillion. And their PE ratio is what we're here to talk about today, as well as their other financials and other things going on in the company. But why is their PE ratio 25.73? Why does that concern you? And, what is it compared to other stocks in this space? If you look at their earnings, they're doing pretty good. This is a company that's beating earnings very consistently, and they're doing better than what's expected. I mean, obviously, they're a very, established company. You guys know Meta is in the Mag 7. Their market cap is almost $2 trillion, so obviously they're doing okay for themselves. But when we look at this PE ratio of 25, a stock that I compare Meta with is Google, a very undervalued company right here that has a PE ratio of only 26. They're in a very similar boat, I think, Meta and Google, when it comes to these PE ratios, because when you go to stocks like Apple, let's check out Apple's PE ratio. This one has a PE ratio of 39.22. This is in a very similar space as Meta, almost the same space. Not exactly, but it's a very similar tech space that they're in. Also, Meta has this way lower. 15 points lower. It's 14 points. That's a lot. That's a lot. That's almost 50%. Not really, but, around 30-40% lower. Just, that kind of raises some flags. And then we look at Microsoft, which also has a PE ratio around 37, almost 38, which is a lot more than Meta. So you're starting to think, Meta's looking kind of scary. I wonder what's going on with Meta. You look at their stock price. Year to date, they're up an insane amount. They're up 20%. And then we go to the past year, they're up 21%. They're very volatile, more volatile than you'd think. They went all the way below 500. Now they're above 700, and then they've also been above 800, if I'm not mistaken. They almost hit 800 in the past 52 weeks, 796. So right now they're kind of sitting in between those two. Definitely closer towards the higher end, but very similar. This is what I wanted to check out. This is a bull case theory on Meta, which I think is not even a bull case theory. I think this is just what's going to happen. So Meta Platforms' recent performance highlights how artificial intelligence, AI, buzzword, is transforming its fundamentals with a direct impact on return on total capital. In quarter 2 2025, AI-driven enhancements in Meta's recommendation system increased time spent on Facebook and Instagram by 5% and 6%. Respectively. That's a big amount. When you take the amount of people that are on Instagram and the amount of time that they spend on there, you raise that by 5 or 6%. Something good is happening. You're keeping people on the app for a longer time. And then upgrades to the Andromeda model boosted ad conversions by 3% on Facebook Reels and nearly 5% on Instagram. So ad conversions are being, risen as well, which is, you can't even make that happen yourself. That's really hard to do. So Meta AI is very impressive for this. I think that Meta AI is a very bullish part of Meta. AI in general is bullish, but the fact that Meta is using it in this regard and with this much, success, I think that it's very, very bullish. So from a first principles perspective, Meta's ability to convert signals into value through iterative code mirrors the operating models for other companies like Palantir, Shopify, and Duolingo, all huge companies. Palantir, you guys know about. Spotify, another great stock, and then Duolingo, pretty good buy right now as well. It looks very promising. Great business model. AI is accelerating this iterative process, enabling faster, more efficient. So I could read this all day, but basically the AI that Facebook is using, or not Facebook, the AI that Meta is using is very powerful. It's working very well. And we look at all time. This is a great company that obviously knows what they're doing. They've had some ups and downs, but very short lived. Very short lived. This is a company that I can confidently invest in and say that it is going to hit $1,000 one day. I could buy Meta right now and hold it and be confident that this stock is going to hit $1,000. I'm not sure when. I'm not sure if it's tomorrow. I'm not sure if it's in 3 weeks. I'm not sure if it's in 16 years. I don't think it's in 16 years. I think under 7 years. But Meta is going to hit $1,000 one day. So you can invest in this one and be pretty confident that you're going to get around a 30% gain, even higher than that. I feel pretty confident that that's going to happen. And that's because Meta is one of those companies where you can, just put your money in it and wait. They're just growing all the time. That's why I wanted to look at their earnings presentation as well. Their advertising revenue. So right now is also a golden time to invest into Meta because they just had a not so great quarter one. In 2025 here, that's I think where the stock kind of had a rough time. Big gain on the back end after that, but they had a rough time in quarter one this year. We see their stock drop the numbers. So in quarter four, it rose immensely, and then quarter one dropped off a little bit, but now it seems to be back on track. This is also a theme in quarter one for Meta. It seems to drop a little bit. It seems to be a theme and then gain throughout the year. So I'm not worried about that, and I see the stock reflecting their earnings and gaining throughout the year as well. I think that's very doable for Meta. Revenue by user geography in millions, not really worried about that, but look at how much they are expanding internationally. So rest of world is much bigger than it was in quarter two 2023. This is a difference of 2 years. It's pretty much doubled. This one's grown about 30%. 50% actually, my bad. And then this one, same thing, about 50%. And then this one, same thing, about 50%. So all of these have grown in 2 years about 50%. Every single revenue by geography, which, if you know anything, 50% growth rates in 2 years is pretty good. That's okay. When it comes to especially a big company like this that already has a market cap of almost $2 trillion, like we saw, it's 1.78. If you're growing with these growth rates, you're going to make a lot of money. This is a lot of money moving around. So the segment results in millions, except percentages. So we can see that this is their sheet right here where they're talking about their revenue of their advertising. We see that that's 46,000, actually in the millions, but this is up from last quarter. But we compare this to quarter one, it's not it's pretty much the same, and then up from last quarter though. But then we look at other, this is up as well, up by a lot more actually. So I like to see that as well because advertising is their main thing, but they do have a lot of different things going on in the company. And then family of apps revenue, this dropped as well. Quarter one, everything dropped a little bit. Reality Labs revenue, this is going down. Very good. They had a crazy quarter four last year. I'm not sure what happened there. But quarter two this year, it seems like they're getting back on their feet. And quarter three is going to be a big decider, I think, that is going to be the one where, you're going to want to be in it because you don't want to be on the other end of that deciding quarter and not be inside of the stock because this is a stock that you can confidently invest in even if it goes down. Just dollar cost average down. I feel confident putting all of my money in Meta. I don't want to do that because I want to diversify and I want to, hold other companies that I think have more potential but also more risk. Meta has all the potential and no risk, I think. Obviously it has risk because it is a company, but not much. General and administrative, so this is our expenses as a percentage of revenue. You see they're actually dropping expenses in every single, regard. We see research and development, cost of revenue, marketing and sales, general and administrative. All of these expenses seem to be dropping as time goes on. I love to see that. Their effective tax rate, we see that this is, that doesn't really have anything to do with the company. Net income right here, we see that this up a lot in quarter four 2024, dropped quarter one 2025, and then back on the right track. So same thing right there. We see capital expenditures. So this is something that I made a video on. If you guys haven't seen it, watch the video about the AI bubble. CapEx is rising a lot in these companies. So year to date, so year to date in 2024, it was 15. Now it's 30. So it's double in a year. That's a lot. That's a lot. You look at the quarters right here, more than doubled over these two, quarter last year and quarter right now, more than double their CapEx. Did their revenues more than double? No. No, they didn't. So the fact that is how fast the CapEx is going up, it doesn't concern me because this is what all the other Mag 7 companies are doing. You're, as good investing in those companies as you are in these as far as CapEx. They're not doing anything crazy different, Meta. And I think that you can't sit on the sideline and be scared about the tech AI bubble. I think it is something that might happen eventually, but you can't sit there and not invest because of it. It's just not worth it. Family average revenue per person, not really worried about this either, but we do see that this metric is going up, which is great. Ad impressions delivered year over year percentage change. We see that this is, changing a lot for the better in the US. It's actually declining and then, seemed to have spiked up. So AI really seems to be turning this company around. It looks great. Not that they were bad, but just look at, 1% to 7%. You're getting numbers that you didn't think you'd see again. Average price per ad year over year percentage change, that doesn't really matter. So yeah, this is, the free cash flow sheet. Look at this, pretty in line with a lot of these other big companies. It's dropping. It's dropping because you see the net cash provided by operating activities is around the same, but then you see the purchases of property and equipment is going up. They're making investments for the future. This is a scary time in the market. I think that a lot of, stuff is going unsaid and untalked about. A lot of big things are going unsaid and untalked about that people don't really want to address. They're scared to address. Let's see their free cash flow. Yeah, it's just going down a lot. And then we see their principal payments on finance leases. Not really worried about that part. But yeah, so very interesting earnings from Meta right there. I think that we're seeing that they did drop a little bit in quarter 1, but it seems to be that they're back on track. And, we look at the past year on the stock price and we see that in, probably presumably quarter 1, it looked like the stock maybe dropped a little bit and then back on, rising back up. So this stock does tend to move a good amount, a surprising amount, honestly, for what the stock is, how big it is. It moves a good amount. Their IV is probably pretty high, actually. I haven't checked that out, but let's check out Meta options. Pretty interesting thing to check out. Probably very expensive. If we just buy it in 194, what's their IV? Yeah, pretty high for a company of this size. So that's pretty impressive that Meta can, garner that much volume and movement in their stock even at this size. And that's, this is one of the most traded stocks in the stock market. They pay a dividend now. Great to see. I love that. But yeah, Meta looks very, good to invest in right now. I think that this is a company you can put your money in and sleep sound at night. You can put your money in here and be pretty happy. You can be pretty, sure that your money's going to grow over time. Not sure at what rate. I don't know. Nobody knows. You don't know. And that's what's beautiful about the stock market is you're going to find out. You're going to find out eventually whether your money is going to grow or whether it's not. And I think that, Meta is one of my next buys right here because I think that, Meta is getting towards the point where it's just only going to go up. It's attractively valued at this 25 PE ratio. That's way too cheap for a company that returns this kind of, returns numerically, but also just the power not power. I'm looking for a word right now. What is the word I'm looking for? They just have way more pull over the rest of the market. They just have a lot more, power is a good word. This company can pull a lot more than these smaller companies can, and their PE ratio is 25. They should be in line with the Apples, the Microsofts, the, companies like that who are in the high 30s of PE ratio. And if that happens, this company is going to be worth automatically without even increasing their financials or anything. If this company was trading at a PE ratio of around 37, that's a 50% increase in the company's price. So I don't think that's crazy. I think that's when the company does hit 1,000, when people realize that. Also, I think that, you can't be fooled by this $700 price figure. Even if you only have $20 to invest, it's the same as investing in a $20 stock. It's just percent changes. I've seen some people say, oh, I can't buy that stock. It's too much. If you have fractional shares, it's literally the same thing. You're just looking for percent changes, and you just have to be patient and dollar cost average, and then eventually you invest $20, 14 times, and then eventually you're getting there. So yeah, so pretty much that's all I have for today's video, guys. If you did enjoy this video, be sure to smash that like button. Also subscribe to the channel, which is free. Very expensive to buy Meta stock. Very free to subscribe to the channel. I'd appreciate your guys' support. Thank you so much for watching. Catch you in the next one tomorrow. Peace.